Duke Health Raleigh campus. Mic test hello. Mic test hello. I think it's delayed. Hello, mic test. Hello, mic test. Hello, mic test. Hello, mic test. It's delayed. I think it's delayed. Hello, mic test. Hmm. All right, all right. I don't know how to fix this, but yeah. Okay. How about now? So we're entering the afternoon pre-market opening or pre-market, and there We have a switch of, it's a switch. Let's start again. Okay, so this is pre-market afternoon session, 11:30. Usually 11:30 down to 11:30 to 2 p.m. We will see some manipulation most of the time. And then 4 p.m. at 2 p.m. is a silver bullet. This is a silver bullet. PMSB. Pre-PM range. So uh, yeah, usually you will see some this one manipulation, but I don't. We're not talking about manipulation here. So we're just following the strategy. So we have number one. We have this crossing of the, it's the number one. Moving average 9 crossed EMA 21. Yes, works perfectly. So works perfectly on ES, but I'm fan of Nasdaq because of the volume. It's more on high volume, and then I don't want to trade ES during Asia session because of the low volume and choppy. But Nasdaq works perfectly on Asia, even though it's a slow market, and that's the only reason why I want to trade. I do trade Nasdaq, but this strategy works perfectly on any futures, gold, Nasdaq, ES, even Forex works also best on Forex, especially Euro, especially JPY, USD JPY, because of the movement of JPY. Sometimes more on trending rather than consolidation. So it works best there, but also works on Euro USD, JBP JPY, JBP USD. So yep. But I'm currently studying Nasdaq, so that's why I'm trading Nasdaq most of the time. So I have here, actually, I consider this an early entry. I'm supposed to enter on the back, but I don't want to. I mean, uh, so there, and then the shift happens here. So if supposed to be, this is the entry here, this on this level. Oh yeah. and this scalp extend until 4 p.m. So this is my time. 1:30 to 4 p.m. is my afternoon scalp. But and then we missed this one here. Actually, this move here is the Lance macro. It's a good, we have a good movement here. But now looks like we are okay. Okay, that's number one. I'm just following the strategy closely. And I don't want to predict, because if I predict and if I try to analyze the market, it will affect the strategy and affect my decision. So it's just like trading. You trade emotionless. So you only see what is the indicators telling you, and what's the signals telling you, and what is the strategy telling you. You don't speculate. Don't try to analyze the market. Just follow the strategy and the exit option, and you will never go wrong. I'm telling you. Uh, so let's do that. So we are a robot, no emotion. Okay, we're just following the strategy. Uh, Supertrend, and after this trade I will explain to you. Supertrend shift. So we have a displacement. We have a market shift here. So all of the indicators to go short is fulfilled, unless unless we will if we have like a exit option will be, if we will meet the exit option, we will exit, because this could be just a manipulation and then continues to go up. It could be, but I'm just following my strategy. And if I'm wrong, I have an option to exit early, and maybe we can see we can witness that. But a while ago, there's a setup before this. A setup was happening here. This one here, very good setup. I was late. I haven't catch this one. I was late, but I was able to enter on the continuation here, and then I exit here positive. I think I was I think 440. I was positive 40. So this was the early setup that hits all of the criteria to enter, and it's very good entry actually. You see like you see one is 3.5, 3 point, yeah, 3.36. It's a good entry, 50%, like 1 is to 4. So this one is very good. So that's one. I missed this one. When I opened the market, the price was already here, and I entered the market because uh, the price break the consolidation, and then created a market shift on 5 minutes time frame, and then after that pre-market range happened, and we have this displacement, and then a switch of indicators to going to sell. So that's why I enter a sell, and I enter sell hoping that uh, was still on the hoping that the price will go down here and continue to consolidate. So this is our new consolidation area, and it's really good consolidation because it's a wide range, and this give us a chance to see setups and give us a chance to have a trade, a scalping. Give us a chance to scalp. Uh-huh. So right now, if I'm trading, like if I'm not scalping, I will go long on NQ, I will go long on NQ. But I'm like only scalping. This strategy is only for scalping. This is to answer your question. So it is a long if I but I don't want to predict. If you go to 15 minutes time frame, and it depends on what strategy are you using. But if like support and resistance like that, I will go probably long once the price will reach this area. Yeah, but right now I will not go long because the price is still trying to trying to break this level here, the 2000s. Actually, I'm on gold, right? Oh no, my bad. I'm on gold. I didn't notice. I'm so sorry. I thought I'm I thought I'm on Nasdaq. This is so bad. Crazy. Okay, sorry guys. Okay, I don't like that. Okay, so I will go with you guys. I will go with the. I'll end this. I will end this trade. Do you think I'll end this trade? I will not because I'm positive. But I'll go break even. I'll go. Yeah, I'll go 70. Oh my God. I want to pass this combine using Nasdaq and for the purpose of educating and sharing the strategy. But fortunately, uh, my maximum I'll be my maximum profit today should be 1,450 only. So I'll go Nasdaq and we will try. I will try doing the practice account. Okay, just for fun. I'll keep this trade because it's winning trade, right? Okay, so let's go Nasdaq. I'm sorry, guys. Yeah, okay. If you're use ICT concept, one of some of my terminologies is ICT. I was an ICT trader before, and some my price action and structure analysis is based on ICT, but I don't use ICT strategy anymore because I think it's not that good. I mean, maybe for me, I'm not good ICT trader. My winning percentage is on 30 to 40% only, and then I totally abandon ICT and I'm just using moving average, basic. Those basic strategy that's it's been there for a long time since ancient time is the one make you profitable. I That's proven and tested based on my experience. I've been trading since 2018, and started when I started like trading. I was support and resistance on forex, and I was profitable. Then after that, I improved my strategy. Trend line. After trend line, I learned smart money concept, and I found out that the smart money concept is invented by or engineered by the ICT on YouTube. So it's where I learn ICT, and then I learned ICT for almost 6 months. Watch his video. I'm an avid fans of him. Uh, then when we arrived here in the US, I tried ICT for uh, for some times, and then I'm not profitable enough using ICT. I just don't understand. I know I tried to understand liquidity concept. I tried to practice it many times, but I think liquidity concept is more on support and resistance, and support and resistance is more accurate, or I should say more on point than liquidity grab liquidity concept. So if you follow support and resistance with the order book, it's more on like that. Then I tried ICT, silver bullet. I passed many account and I blew it up, blow multiple funded account. So I said I'm not a good ICT trader. I need to go back to basic. I go back to basic support and resistance. Went back to having using trend line, and then after that moving average, and it's where I discovered this strategy that I'm using because I'm more on scalper. I'm more on scalping. So try to scalp and I became profitable using this. So I'm scalping on a specific time frame only, on a specific session, I mean, and just following these rules uh, religiously without my emotion being affected to and whatever I see. So just following this. Oh, so if you follow the, I will explain before this end. If you follow the option exit option, uh, 1A to D, I put on the description. If you follow that, you will have a chance to have no loss at all if you follow that. And you have also a chance to catch a trending market, and then it's a good, I will say 90%. I do have 90%. So but the weakness of this strategy, I'll keep on telling this, is of course the user. That's the number one weakness of this strategy. Second is consolidation. So you need to locate which consolidation is tradable or which consolidation is non-tradable. So that's how it is. So like for example, right now on this Nasdaq, I'll give you an example now. So we're currently consolidating on this level. Okay. I think I lost on the gold, most likely. Yeah. Let me go. I'll close this gold. So I cannot monitor that gold. So let's go. Let's go to the Nasdaq. Oh, instead. So right now, NQ. Let's see. Let's switch that. Okay, right now we are in consolidation, and then the super trend support that consolidation because of this straight line, but it's still on a bear market, bear. That's because of this displacement candles. That's the reason for that. Now, I don't have a setup here at this moment. It's because my moving average is above the 21, which tells me that I should buy. So I should buy. That tells me. So see the cross what's happened here. Now we will have a displacement soon. Once we break this area here, and that's a confirmed displacement. If we break that, like for example, if we break that there, and that displacement create a fair value gap and create, of course, market shift, this could be a continuation setup. Right now, we fulfill one. There's a cross of moving average 9, the blue one, to exponential moving average 21. That's number one on my indicator or strategy. Number two, super trend switch to bull just now. Now we're just waiting for a displacement to happen on this level, and because the 1 minute time frame doesn't give us a good fair value gap, and we have a good volume, this is the time that you go to 30 seconds. 30 seconds will give us, and if not, we'll go even down to 15 seconds. So we can do that. But right now, let's see 1 minute. Okay. So now we're there trying to. So we'll wait. Number one is fulfilled, and then signals us to okay, go buy, but we don't have a confirmed super trend and confirmed displacement. So we'll wait for that. We'll wait for that. I hope I can replay this, but I think not. I will go to trading view after I'll set up a trade, and then after that we'll go to trading view. But an example of that setup is this is the nearest. So you can see, as you can see, we are already on a bull trend on a 1 minute time frame, and then it signals us to like there's a short period of bears, but it's still supporting bull, And after that, we cross back. So this is a continuation setup. We cross back. We created this, created this market, what you call displacement with breakup structure. A breakup structure here. It's all, yeah. And then, oh, sorry. Breakup structure. And then we do have a multiple fair value gap on this area. So we have here, there's a fair value gap here. And you see the fair value gap. If you put your entry here on the 50%, which is the optimum entry, you will have a very good trade. And if I catch this trade, my exit will be this point. Yeah, so that's my exit option. This one here, because the moving average 9 crosses the smooth moving average 10, which is the red one. So that's my second option to exit and to exit. So say that's my second option. First option is always the 1:2, and if you want to try to catch, this is what I mean that you have a chance to catch a trending market. So as long as the blue will not cross the red, keep your trade, keep your trade. But once it crossed, you have an option number 2 or option B to exit the entry, and you can always re-enter. So you exit. But if you are like stubborn and you don't want, and you're like predicting that the market will still go up even though it crossed, you have an option to exit. Exit option C is to exit on once the blue will cross the 21, because that is a signal to first signal to buy, right? So yeah, so you don't want. Or if you're still hoping that the price will still go up, the last option to exit is once the super trend shifted to bear. So by that time, exit the trade. Well, no matter what, because there's a tendency that will continue to go down, like what happens here. But of course, that's the exit that I standardize or I put on this strategy to avoid losses and to minimize losses or avoid losses. So you see, if you catch this, and it's easy to catch, it's very easy. Without even thinking of anything, you don't need to check any news. You don't need, just follow these moving averages, and then enter on the 50% fair value gap. If you don't want to enter on the 50% level of the fair value gap, enter on the once the fair value gap is mitigated. And before, for example, this market here, before it will switch, I'll give you another example. Like for example here, considering that this is just an example. So considering this is a fair value gap, like okay, this is a fair value gap, you enter here. I'll give you an example why the exit option is so good. You enter in that, then you put your stop loss here, like for example here. And you see, if you exit on the first option there, you will prevent yourself from hitting your stop loss because you exit there. And you will not lose a trade. And then you can always enter after the setup will come. So that's what I mean. So the best part of this strategy is the exit options, and that's my favorite part. I don't know. If I hope you understand, or you follow, and I advise you to backtest this strategy, and you will see. So once you backtest and able to grasp, it's so easy to understand. And after that, the only problem I think I see that will arise, the only problem will be yourself. If your emotion. So if you set aside your emotion and just focus on the strategy, follow the strategy, no matter what you hear, no matter what suggestion you will receive, just follow, like trade like a robot, or trade like algorithmic, the one on the MetaTrader 4. I forgot the term, the robot trading. Trade like that, and then you'll see. And always consider the exit option to avoid any loss. And now you see, now, okay, we're moving. So let's see. I like this. Now we have a displacement, and this is a market shift. And I think I will see. If I go to 30 seconds, there you are. I got you. We're creating a fair value gap here. Got you. We are creating a fair value gap. Yeah. So, with creating, we already have. And let's see if I'll put my market buy, limit buy. Let's see, limit buy. Okay, let's see. Limit buy on a 50% of this fair value gap. Right? Boom. So we're in the market. And then, of course, now once you're in, you have that fair value gap on 30 minutes, go back to 1 minute. And then the first, how to, okay, so I got this question a lot. How to set up a stop loss? The first safe stop loss is where the super trend level is. That's the first one. And you see, because the shift was happened here, but we have this very good, I know you know this candle, this candle here, right? A hammer, a good one, bull hammer. So meaning there's a strong resistance, strong resistance. Let's see. There's a strong support on this level, and I'm guessing we have a psychological number is 20,480, and we have two psychological number, and they are very near to each other. We have where is it? From this time of yes, we have this. This is psychological number. Always been here since last night. Okay. So, psychological level. So it was a psychological bull level yet last night, but we break that, and I'm guessing this will be like a bear psychological level. So I'm very cautious of this one. Most likely after we hit this one, if we will fail to break this one, we'll see some pullback. Yep, we'll see some pullback. So yep. Uh, so usually the stop loss, after you put your stop loss on a safe one. So I'm waiting for this candle to break and created a 1 minute fair value gap. If I do have a 1 minute fair value gap, like for example, on 30 seconds, we have a fair value gap here that has been mitigated and fulfilled. Supposedly, if this is 1 minute time frame, I will put my stop loss here. I will secure it here. So the stop loss should be ideally once ideally is on the first candle that created the fair value gap, and that's I get that from ICT. But since the trade is still not safe and we're not risking a lot, I will put my stop loss on a 1 minute where let's see. Now I think we will see some exit option, so I'll put my stop loss here. So my tolerance is negative 400. I cannot risk more than that. I don't want to risk more than that. So I think this is a psychological level, and then we'll see. I'm not happy of this displacement. It's not that good because on 1 minute time frame we don't have a fair value gap. So this is an early entry, could be, but on the 30 seconds we have, but we nullify that fair value gap. So I'll go 1 minute and I'll see if this will cross. I will still go. I will wait for the blue to cross the green before I will exit. I will risk a little bit more, and because we are not consolidating, we are more on trending up. So I'll go option C, which is moving average cross the exponential moving average 21. We'll see. We'll see. So let me see. Yeah. So, so if you are using this strategy, you should be like. But ideally, if you stick to 1 minute time frame, we don't have an entry here. So far, we still don't have an entry here. Right now, I'm not confident of this trade. Let's see about it. I'll exit. So, yep, because we failed to have a good displacement and we failed to have a fair value gap. And if you go to 30 minutes, we already have a cross. So I'm not confident of this trade. So I'll wait for a good displacement and a good fair value gap. No, I trade heavily on New York, New York AM because it's where I catch a good trend. So we'll wait for the displacement and I'll focus on 1 minute time frame. But I really don't want to pass this for now because I want to live later. We'll see this level 500. Yeah, I trade mostly on my real account, not the funded account, on a New York time frame. I trade actually earlier. Uh, Let me see if I can grab my trading view and I'll show you my. I'll not log in. So here, I trade a while. This one I catch this one earlier. And I have a good. So let me see. I'll show it to you. So we are really not doing well here. So unless I will see some good like that and create a fair value gap, then I will trade. So I don't see any, and it's an afternoon market. I will always, most likely this move here is the real deal. All right, so I'm not expecting any move right now because it's 2 p.m. already. Let's see after 2:30, maybe we'll see some. I think this one is good. Okay, this is beautiful. It's too far. Let's see 30 seconds. It's still bullish. It's 15 seconds. We do have a switch here. I think this is doable. Let's see. We have a good. Okay, we have a chance to. Oh, we missed that one. Let's see. Price will not go back there. It's too late. We cannot catch that. Let's go to. Yeah, we cannot catch this. So you see, if you're following the exit option, we cannot catch this. So we'll try to catch. If we'll come back here, and then we will target this area. Let's see on a 1 minute time frame. I'll say It's a not a bad volume, I guess. In itself, confirm. Okay, let's see. So our stop loss should be here. Put our stop loss here. If and then we target 1 is to 2. Okay, this is the third candle, and this will this is okay. If this third candle will pass and will pass this one and create a shift, and then I don't think so. So this one here. I think we're late. We have the crossover there. We have now the second option. Uh, I don't want to enter because unless the price will hit this, we'll go and then I'm okay. But if not, I will let this trade go. So don't chase it. It's already on the middle of the consolidation. It's too far already. Unless the price will go back and mitigate this or retest this fair value gap, and then we're in. But if not, we will let it let it go. Let it go. Yep, let it go. Okay, let's see. If we won't able to catch this, we will wait for a movement go up because this is a clearly manipulation, consolidation manipulation, and after that we'll see some distribution. So okay, let's go back to this is my trade earlier. So this is where I traded earlier, and I'll show you. So I was I entered here. This is the switch. This is where I entered. This one here. Um, yeah, this is where I entered. One, two, three. This is where I entered. I s and I'll replay that to you so that you can see how to execute the entry. So I was on 1 minute time frame. Uh, I woke up like around 9 o'clock, and I was waiting 9:30. I'm already in, but I see this trending market, and I said, oh, I'm already late. Retail traders like pushing the market up, and all of a sudden, this is what I saw starting to cross, but I'm not confident to enter, and then I have this cross here. So this is where I enter one. I put my stop loss. We have this, if you can see, we have a multiple, like a two fair value gap here. You have a two fair value gap one, and there's another one here. There's another fair value gap here. So I did not wait for the price to mitigate that one because uh, because we don't have yet a shift. We have a minor market shift, but we don't have a real market shift until this happened. So I was already in, and I am predict. I mean, it's a clear manipulation. I mean, this yeah manipulation. I said I will ride the manipulation, so I put my stop loss on a safe zone earlier, like there. It's too high, and then after, but I said okay, I cannot risk that, and I put it down below here, 300, and then I just ride along. So you see, I exit on my option there. I I exit here. That's my first exit, and after that, yeah, I have another breakup structure. Then this is where I re-entered my trade, and I put my stop loss there. And then I was aiming for actually more. Yeah, so that's where I put my. You see, I almost hit. I don't remember. I think yeah. So yep, I was stopped there. That's and then I wait for like that. Where's my signal? One, two. I re-enter here actually. I was stopped there and then I re-entered on this fair value gap. I bought again. This is how you trade it. Put your stop loss there. Then I was, yeah, but I think I did not hit that. And there I exit again. So, and then after that I said, I'm done. So I have at least 2,000, like 2,300. I have a 2,300 on this move. So I, I exit, my profitable exit. After that, I hit a stop loss and then I enter again. So I have three trade, which I earned me like 2,400 on my on my account. So that's how you do it. Okay, so let's see. So this one is not a good, will not. So that entry is nullified already. It's nullified. So it's a narrow range. Let's see. So let's see if we can enter a continuation or if we can have. Let's see that this is a group of fair value gap from there. I'm not afraid of this one here. So maybe this is a new consolidation, which is not good because it's narrow. It's not that wide. So we will not have a good profit if we trade this one. So I rather not trade this one. I rather not trade this one because we're not having a good move here. So so no trade for me. This consolidation is, although it's high volume, it's really narrow, and we're not having a good setup. You see, we haven't met the first criteria yet to enter the trade, and the price is already on the above the 50% of the range. So avoid this one. If you see this one, so this consolidation is an enemy of this strategy. So we should not have a trade right now. Rather not to trade right now. All right. So I don't have. I will not trade. I'll go back to gold. I was happy. Oh, you see, very good one. You see, if I continue that one, but it's fine. It's fine. We're already late. We're already late. So this is a late. We cannot have anything there. Okay, at least I still have. I can still play this later. Still need to. What time now? Yeah. Okay. Let's wait for NQ. Maybe the NQ will move. We'll see NQ. Okay, we'll wait for this consolidation to break. Then we'll see some setup, right? Okay, guys, I think I don't have a setup now. If you have any question, feel free to ask. So it's just like that. So you see, a while ago here, if I put my emotion on it, I already lost. Like I hit my stop loss already. So I was able to exit with a minimal with a minimal loss. I don't know how much I put back on that trade. We were here, okay. So that's the last trade, right? So I have like 115 instead of losing 300 or 400. Only have 115. Uh, so I exit early, right? It's good. So this is my for this combine that I'm trying to pass for my friend. This is my my third day. It's my third day. I lost 400 on Friday because I put a journal like did not follow session time to trade and emotional. So I trade 7:30 p.m. to I traded 7:30 p.m. to like before the opening of Asia, and I was emotional. I put a lot of so because I feel like I'm emotional, I lock my account after losing 400 because my tolerance is below 400, and like I have this 416, so I lock my account. I don't want to trade anymore. I said okay, so that's what I'm practicing. So if I lost 400 a day, I will lock my account and I will not trade for maybe for 2 days. Same goes if I like win more than 10,000 in a day. If I have more than 10,000 in a day, I will not trade for a week. I don't want to give back. I will get my payout first, or I will withdraw some of it, and then I'll trade next week. Yeah, so that's my rules. I set that up. If I have more than 10,000 in a day, or in 2 week in 2 trading days, 10,000, I will stop trading. So sometimes I have like 12,000 in a week. Once I reach more than 10,000, I will stop trading. I'll trade next day. We don't need a lot of money. We just need some. We just need enough to pay bills and pay support our family. That's what. That's the only thing we need. If I lost 400, I will stop trading. If I have like more than 10 in a week, I will stop trading for. I will go some. I'll rest. I'll take care of my kids and enjoy my day. So that's my rule to prevent me from being greedy and emotional. So my aim is just to able to able to pay bills and uh, not work full time on my profession. I am a nurse, but I cannot leave nursing profession because I love doing what I'm doing, and I'm hired on one of the best hospital here in the US, best health system, and I love working with them. People are so nice, so that's why I'm still doing a part-time nursing job, and it's give me some insurance. I love the benefits. Getting insurance from an employer is fantastic. That, yep. So that's why. But sooner or later, maybe if I have enough. Let's see where this is gold. I think I like gold better than the NQ because the range is more wide. Let's see this gold. Um, so an afternoon session after 4 p.m. or after 3:30, uh, I'm done trading. Win or loss, I will not trade. So this is and then if you this one I haven't catch this one, but this one uh, this two trend, this is better than this one. I rather have this trend market here than this one because this trend is caused by a retail traders, and it has a good movement and not that volatile. Compared to this one, this is a dangerous like trend because not all the trader here is not only a retail traders, hedge funds, accompanied by manipulation, accompanied by smart money and big funds. So price can move abruptly and volatile. It's volatile. So I rather have this one than this one. But if you're following the strategy, you can have both, and you can even have this. So I was not around at 9. You see, 9:30. I was hesitant to trade. I don't. I think so. I trade here because I already the price was already here. But if you were here 9:30, this we have 1, 2, 3 trending market, and let's test this one. Okay, so Let's go to the trading view, and I'll show it to you. I'll run using the strategy. So, like for example, you are here at 9:30, so you wake up like this here. And my rules to this strategy is I will not trade, no trading, no below 9:30 a.m. Before 9:30 a.m. no trading. So 9:30 onward is where you hunt your setup. So you're here, you're following. Then this happened. You see, this is a good displacement. Okay, then you have a first fair value gap there. And do you think that fair value gap is a high probability fair value gap? Of course not, because this is you know institutional trading. Now, if you see that, and although it's not high probability, but if you see that you won't able to catch it, don't chase it. So wait for this is my entry. Okay, now this will be my entry. Show it to you. My entry will be here, and then one more candle. And now we have two fair value gap. Now you have two fair value gap. Which fair value gap you consider? So don't stress yourself. Draw your Fibonacci premium and discount. Measure that one and put your you can enter either, let's see. There. You can that have entry or wait for the 50% to let's repeat it. Uh, so put your entry. The optimum entry is on the 50%. So like that. So you can have that 50% entry. So that's to help you decide which fair value gap you choose. So draw your Fibonacci and go go order. Put your order on the 50% time frame. Let's see. Okay, let's hold on there because now we have a good displacement here. Okay, I'll sell this one. Okay, and I'll put my stop loss here. I could be wrong, but I don't have fair value gap. That's a. I could be wrong. I could be wrong. I could be wrong. This is mine. Okay. All right. Let's see how this trade play. Okay. Last trade of the day for this combine. My friend asked me to last 2 weeks ago. My friend asked me to trade his combine and pass the combine. He's a new trader, and then within like 2 hours, I blew the account, and he was so mad. So now I'm paying him back. I said, okay, I'll I'll have another combine for you, and I will trade it while doing the live. Okay. How many? I think I still have maybe 700. Say 800. Uh, and I have an option to, so actually, I'll add some of this trade. There's a volume imbalance here, and I'm expecting the price will hit this volume imbalance. Let's see. Limit sell. Once we hit that, we can move our stuff here. Let's see. but I don't like this. I don't like this candle, but we'll see. We'll see. Oh man, see that volume imbalance? Always. Price will hit volume imbalance. So this is a volume imbalance. You can see this gap here. It's a part of the. It's a part of the. What you call that? I hate it. I should put. It's a part of the fair value gap, but this is where there are more seller than the buyer, and then you create a gap, a volume gap on. It's not a gap, but it's on the week. I should put mine. Yeah. So there's also like if you are not, if you have a like a narrow fair value gap, you don't need to put your entry to the 50% of fair value gap. Especially you have like this, you can put it there. If you have like if your fair value gap happen to have a volume imbalance, now celebrate because this is a good fair value gap, and don't chase the price like what I did here. I haven't noticed that one because it was too narrow. Like, don't chase it because price will always, fill that gap or that volume imbalance before going down. Oh, based on my experience, like I've noticed that most of the time, and I can prove that to you. You see this here? That's a volume imbalance. I'm not really paying attention earlier. And this one is volume imbalance. And you see the price try fill that gap, that volume imbalance, and it's on the fair value gap. I'm not really analyzing the market, but haven't seen this one. So you always feel that gap, then going to that direction. Uh, but of course, that is not applicable once the price is already like two away. Like for example, this one here, it's uh, it's already like too far for the price to go here like that. It's not applicable, and we already have mitigate or try to retest this fair value gap, so it's not applicable to that. Okay. Now, uh, an option to like an option to there's also a like strategy or my I don't know science. What I call it science when you add your or when you add your trade. Like for example, this one, okay, this is a good thing, but we haven't mitigated because I put on the 50%. But this is a sign that you add a trade, you add an entry to the trade. This is a good sign. But if this price will fail to break this level here and then try to go back there, don't. So only once, like uh, you know, uh, if I try to explain it like this, without this, the fair value gap and the volume imbalance is still virgin. And then after that, divergenized. You will not like uh, a use, you don't like it, right? So you want to be the first to have that fair value gap. So this is your entry. If try to retest this, don't enter the trade. Like leave it alone. Because the tendency maybe we will have a like continuation go up. Sometimes we'll like retest and then go down, or retest again and then continue to go down. But to be safe, enter the trade on the first retest, and then watch the trade to go. So let's see. 450 is my 450 is my psychological level, and 500. So I will so respect the psychological level. Always respect psychological level. A psychological level is even numbers like 450, 500, 350, 450, like that. Those numbers are psychological levels. Like what I mean by that is psychological number is where most of the people put their order. Um, like if you are buying stocks, Like I want to buy Apple right now, and I will buy once the price will hit 350, 300, 400. So it's like a common psychological, it's like a common mentality where people put their order on an even number rather than 251, 252, right? Make sense? So always respect that level, and especially you will see a price like this. This is consolidation. Mm. If you see a price like this, yeah. So try to find a psychological number that driving that movement. So now I will say I will respect 20,500 and I will respect 450. So instead of putting your take profit on like here, because this is a uh, like here, okay, I'll put it here because this is a demand zone, right? I would rather not, or here because this is where the fair value gap. So I would rather not to be safer and conservative, and I will put on here this one here. Not bad. Winning 420 is not bad, right? So that's how you do it. Uh, that's how you do it. I don't know. I hope you're still listening and you're learning. Yeah, that's how you do it. Okay, so at this point of view, it's time. We'll remove that one. Mhm. So I think 460 is a resistance. We'll see. We'll see. I'm fan of psychological level uh, because I buy some stocks. Okay, I think this will be my. This is not a good market. We passed that one. Let's try to pass this one. Okay, and we are not really trending. If I would be happy if I see this super trend to go like that rather than the one we have right now. See, because that's it's an assurance for me that we're trending down. Like you see what we have right now is like that, straight down, straight. It's more on still on consolidation, still on a consolidation move. But I would be happy if I see a movement like that, like a smooth movement going down or a smooth movement going up, like what we have here. So that's what I'm hoping for. Okay. But we don't have that. Mm, it's still valid. It's still valid. That this is. Mhm, it's not a good entry. This is a good bad entry. Not following any, because I don't have there. I should enter here and have my take profit there. Stop loss should be there. If I enter here, stop loss there. Actually, I have 1:2, right? Yeah. Now this is a continuation setup. Continuation setup. I missed that one. This one is dangerous. This one is dangerous. No, I'm not using VWAP because will create more confusion on my confluences. So I'm just focusing on, so this strategy just revolves on these two main strategy. Combination of moving averages, moving average, simple moving average and exponential and super trend. So I don't use VWAP because VWAP is, let's see, how can I explain it? Doesn't support doesn't support the moving average that much. I don't know, but they are not like correlating. I tried VWAP. I tried VWAP first before Supertrend, and then Supertrend is the one favorable and the one like uh, coordinating with the moving averages that I have. Mm, yeah. Okay. So now let's see. I don't want to lose more. So I'll put my stop loss on that, and let's see. Uh-huh. I will keep. I don't wanna win this now. I wanna keep a little bit late. Keep some. If I have this 551, I still have like 400 later to trade. Yeah, so I'll keep some 400 for educational purposes later on our Asia session. If I have a chance, I'll put that. Okay, 1:2. 390 is fine. Let's see about that. So if I see new fair value gap, I'll put my, but I'm not, no, I don't know. It's still not safe to put the to put the stop loss here because we don't have yet. We did not displace this level here. If we displace this level here, I say it's safe to. Oh, hello. Hello. Yes, hello. Yes, sir.
Hey, this is Dave Matthews. I'm the nurse manager at VCU CMH. How's it going?
Oh, yeah. Hello, sir. Good evening. Good afternoon.
All right, so are you still interested in the contract?
Yes, sir. Are you calling from like Aya? I think my agent sent application
I'm,
South Hill.
I'm, I'm calling from VCU CMH, which is in South Hill, Virginia.
Yeah, yes, sir. Yeah.
So we have a little tiny ICU that has 10 beds, but the average is anywhere from 6 to 8 patients.
Mhm. Yeah,
And,
yes,
you
sir.
know, do you want me to interview you for an opening that we have?
Yes, sir. Sure.
Any idea when you would be able to start?
Um, November. Let's see, November 18 is the best time for me. Uh,
How that works, we it takes us 4 weeks to hire you.
okay. So yeah, I like that. I like the time frame.
So what we have is all we have right now is a night shift opening, but our ICU can hold 10 patients. The average time is about 6. So all of our nurses get pulled
All right. Sorry guys for that. One of the facility where someone called me. It's a travel nursing job, and I love to grab it. Yeah, not doing anything right now, so yeah, it's a good gig. I need to work 3 times a week with 2,000 per week, so that's a good one. I'll take that one. I'm not doing a lot for 3 days a week. So yeah, okay. So we hit our take profit, and as you can see, uh, I live like a 900 or 800, 860 to trade later, just for the to do live. But I was right. We have a resistance just above 20,450, and the price is starting to. So it is confirmed for me. It is confirmed that this is a consolidation zone, unless we break this one. But if we will not, okay. So it's not a bad trade. Uh, if happens to if I analyze well earlier, if I was not talking a lot and switch to trading view, and if I saw this one here, this will be like a 600 on a position one, most likely. So we hit that. One is to 3.5, so it's a good call to put the stop take profit there, and we'll see. It's already almost 3 p.m. and 3 o'clock is the end of silver bullet, and I'm not expecting the price to move that much after that. And I think this one here is the the true setup. It's the true setup for this afternoon session, and we managed to have some of it here around here. So we managed to grab some of it, like $300, right? At 295. But we did not able to catch that one there. But it's not a bad trade. It's still good trade. So by this time, if it's not, I don't advise you to trade, like, because I don't advise you to find a setup here, because if you wait for the setup, the moment the super trend switch and this will cross, the price will be already here, and then you only have like this area here for take profit. So uh, that's one thing to notice, if you to help guide you what is your bias. If the price is like, if this is a consolidation zone, for example, you without this move here, and your consolidation zone is here and there. So this is your consolidation zone, this area here, from here to there. So in order to help you decide if you're going to sell or if you're going to buy, is to analyze where would be the price, where would be the level, if you have all the signal to sell or you have all the signal to buy. And on this time, you have a better opportunity to have a good ticks if you sell, because when the price, the price switch over here, and you created like a displacement here with fair value gap and market shape structure, and then you have this room to have a profit, like more than 50% of this consolidation. And unless we will have a cross here, and then this super trend will switch while the price is still here, and I will say that's a good signal to buy, because we have a good room for this consolidation. So that's how one of the one one of the way to analyze your trade, or your risk and reward, something like that. Yeah. So I hope you have something to you learn something to this from this strategy. And it's almost 3 o'clock. I'm not confident to trade, and I don't want to pass this account for now. I want to leave like at least 2 days to have a video, yeah, to use this as a like, what you call that, as a trading live. So I'll keep it that way. So okay, so to this trading account, it's 3 days already. Uh, if I did not, if I did not experiment this trade here, maybe we'll have 100% winning rate. But it's because I was trying to, trying to practice the untradeable time. So it's where. But here, you see this trade here. I have like three trade, 3/3, 100% on one day. So I put rules followed, strategy executed well and followed. And as you can see, I have this entry within less than 30 minutes. I have all of this win rate, 3/3. Perfect, right? And this one here, I have a lot of trades, and I'll show you. Uh, all of my loss here, all of my loss here is an early exit. Like for example, this one here, I enter the trade, and then after that, my exit option mitigate. I have assigned to exit, and I exit. I lost only $15, and then again here, I lost another $20, and unless here, and then here, the one we have right now. Sorry, this is a fee. I think I think this is a fee. But you see, I have like 1, 2, 3, 4, 5, 6, 7, 8, 9. I have a 9 trade with 3 uh, loss exit. It didn't hit my stop loss, and I have a profitable exit, 30, 16, 20, like that, and this 50. That's all an exit because I'm not sure the price that will go up or go to my direction. So I exit and I end up losing nothing, instead having something uh, with a trade that against my strategy. So that's why I'm telling you that it's really important to follow the exit rules. It's really important. So I'm ending this live now. We'll see you later. I'll be doing another live later. Thank you so much for joining, and I hope you learned something. Later, I'm going to explain. I haven't explained yet to you. I'm hoping that we have a bad market later, like bad market. We have a setup, but bad market, so that I can show you what is the tradable tradable setup and non-tradable setup. And I also hope that if not, we will have some continuation setup so that I can explain to you when to re-enter the market after a failed setup. Right. Okay. So thank you and have a good day.